Senator Lummis, who is a real friend of the crypto industry and has promoted a lot of important legislation like the Genius and Clarity Acts, has come out with another act called the Digital Asset Tax legislation. And this is basically seven, I would characterize them as miscellaneous tax proposals to help clear up certain areas in the tax code where for cryptocurrencies it's a bit vague. I would say this is great that she's addressing this. There's six proposals. I think four of them are tremendous, and two of them I don't like. Are you interested in hearing what I think? Well, let's get into it. The four things that I think she did well is setting up staking and mining income to be taxed only when it's been sold or disposed of. And this has been a very big issue. Makes it so that you only have to pay taxes when you've actually made income from those rewards. The second improvement is elimination of the requirement when you're doing a charitable contribution of cryptocurrencies. You had to have, the IRS had required you to get a qualified appraisal from a qualified appraiser, which was a hassle. And there weren't many of these people. And they basically have this new law gets rid of that requirement when you're giving away actively traded cryptocurrencies. So, where the pricing is pretty well public anyhow. The third proposal was for active traders. It makes it so that the mark-to-market active trader options are available for cryptocurrency traders. That's great. And the fourth one is clearing up an issue on whether or not lending of cryptocurrencies was subject to tax. Typically, if you're lending other assets, they would not be subject to tax. And this bill makes it very clear that it's the same for cryptocurrency. What don't I like about the bill? And I got some really, I think these are two big things I don't like about it. The first one is she wants to institute the wash sale rule on cryptocurrencies. This is section 1091 of the tax code. Her argument is this way, cryptocurrencies are taxed the same way securities are taxed. Well, what is the wash sale rule? The wash sale rule is what in cryptocurrency would eliminate what we call tax loss harvesting. It would, if you like doing tax loss harvesting or did it before, wash sale rule eliminates that. Here's how it works. If you sell an asset for a loss and then 30 days before or after that sale, you actually buy that asset back, then you are denied the ability to claim that loss. It's just totally gone. That loss is totally gone. This is the wash sale rule. I call this a stupid tax. It's a tax on people being stupid. It's something that novices do the first year they're getting into active trading or day trading. They learn about the wash sale rule. It's harsh, it's mean, and they figure out they're never going to do it again. And stock traders, experienced stock traders, never deal with this tax. Why? Because they're smart enough to work around it. How do you work around it? Well, you're going to sell on one exchange and you buy on another exchange. And that way the two exchanges don't know that a wash sale event occurred. It's not reported to the IRS. IRS never knows. You never suffer the loss. This is a stupid tax. Rather, I think Senator Lummis, instead of making cryptocurrencies be just like stocks, I suggest this. Let's do away with the wash sale rule altogether. It serves no useful purpose in this modern day and age. The purpose, ostensibly, of having the wash sale rule was to prevent investors from churning a stock in and out, in and out, in and out. So they put in the wash sale rule to discourage this. And I just don't see that as a viable business reason for us having this sort of nasty tax. This is a nasty tax, and it should be removed from stocks and should not be applied to cryptos either. So that's my opinion on that. The second thing I don't like about this rule is quite heralded as the de minimis rule. She's proposing that there's no tax on the gain or loss of transactions that are under $300 on a particular transaction or a total of $5,000 for the entire year. Why don't I like this tax? Well, that's nice. You don't have to pay some tax. Very good. Guess what you have to do? You still have to track it. It's very clear in the bill. It states the taxpayer must keep books and records to justify that they didn't pay tax on this. You know, what's the purpose of this de minimis rule anyhow? What are you saving me? I still have to track the profit, the loss on these little transactions. It's not saving me as a taxpayer anytime. It's not making my life any easier. I get the small write-off. Whoop-de-doo. They should really focus on doing substantive tax law changes, because as we move into a society where everything is going to be blockchain based, everything has a token attached to it, every real world asset, even voting rights and all sorts of other things, we simply cannot have a tax law that wants to charge gain and loss on every single transaction and apply the burden of tracking that to everyone. It's just silly. We need to define greater classes of assets that are not subject to taxation on capital gains. I suggest getting rid of capital gains tax on cryptocurrencies altogether. Or, as I would phrase it, another option is to treat all cryptocurrency transactions as being taxed at long-term rates, regardless of how long they're held. What do you think? Let me know in the comments below. Please like, subscribe, and follow. It means a lot to us. Thank you very much.